All right, you guys, we'll get started here in a second. Common mistakes to avoid: misreporting or omitting income, forgetting income, forgetting to report your 1099 income, forgetting to report interest, dividends, freelance work, gigs, Uber, Lyft, DoorDash, whatever it is. Just because you don't receive a W-2 for it does not mean you get to forget to report that income or purposely not report that income. The IRS knows that you earned this income. They are looking for you to report it. And the last thing you want to do is get caught underreporting your income. When you are selling stocks like crypto or capital gains or anything like that, you need to make sure you are using the correct basis. When you don't use the correct basis on this, it's actually going to give you the incorrect capital gain or loss amount. And once again, the IRS is catching those who receive cash payment or income from side hustles or income that is received from Cash App, PayPal, Venmo, any of those. They now have the 1099K tax form, which you are now required to report that income. Get with the tax professional if you receive the 1099K, because it's a gray area. We know that a lot of people use these third-party apps for personal reasons or for repayment or to send somebody birthday money or whatever it is. But the IRS whole idea behind it is to try to catch those who may be running a side business and receiving income through these apps to avoid paying taxes on it. Another mistake is missing out on eligible tax deductions or credits because you are unaware of the qualifications. Overlooking carry forward deductions that are carried forward or credits from the past tax year. And then not knowing the difference between your standard deduction and your itemized deductions and which one you should take. Choosing the wrong filing status is also a big one. A lot of people miss out on, I guess you would say, taking advantage of head of household when they are eligible. And sometimes it gets a little confusing when you just got married and you don't know whether or not to file separately or jointly with your spouse. So know that sometimes choosing to file separately could result in a lower tax liability. So you kind of got to figure out what best fits your situation. Now, filing separately sometimes could be necessary depending on your status. So if your spouse, let's say, has tax debt, they owe child support, they have student loans, they owe the IRS, whatever it may be. If you file separately, the spouse would be liable for it and you wouldn't. But knowing that married filing separately also could disqualify you for certain credits, which may lower that refund. So you kind of have to work both scenarios and find out what's going to work best for you in your situation when you are filing with a spouse. Math errors and typos is a big one. If you are incorrectly typing in Social Security numbers, your return could be rejected. If you had the wrong bank account number, it's going to take them forever to process your refund and to give you a check. And a simple calculation error that could be made through a software can also red flag your account. Now, filing late or paying late, that can give you a failure to file and a failure to pay penalty. Interest. This adds up. If you had unpaid taxes and penalties, interest adds up over time. And remember, tax extension. Form 4868 gives you more time to file your return if you don't have time to file by the due date. Keep in mind, that does not give you more time to pay the amount that you owe. That is still due. But filing this extension gives you 6 more months to file your return. If you guys haven't already, go to my video. There's a video on my page that tells you how you can file your tax extension online for free to avoid paying any penalties or to avoid paying the failure to file or failure to pay penalty. Get that done and then pay if you owe any taxes. Here's a big one that a lot of people don't realize that they do every single year because they want their refund. Filing too early. Rushing your tax return. That we know that your tax documents are supposed to be sent out by January, the end of January. But just because they were sent out don't mean they were received. They could easily get lost in the mail. Your tax document could have a misspelling, a calculation error, whatever it is. You have to take time to make sure that you received all of your documents, because sometimes we do receive them later. Make sure all of your spelling, all of that is correct. If it is not correct, you have to take the time to get with them to get a corrected tax form. Okay? You want to make sure that you are in the know about the updated tax laws, because there were a lot of people this year that were unaware about the 1099-K and they actually received it, but they didn't claim that income on their tax return. So when that happens, we have to go back and amend their tax return to update their taxable income amount and to include the 1099-K amount. So before you rush to get your taxes done, make sure you have all your documentations. Make sure you are updated on the new tax laws and requirements and whatnot. Here's one thing to keep in mind: how to avoid penalties and IRS flags. So at this time, you want to prioritize that everything is correct. All entries, everything, social name, all of it. Maintain solid documentation for all of your income, your deductions, and credits. And if you ever receive any IRS notices, you have a certain amount of time to respond. Respond within that window. So knowing these mistakes help, but so does knowing where to find help. So now we're going to look at the tools and resources that are available to you to be in the know.